The economic storm just darkened. Hey, everybody, you're watching Bull Boom Bear Bust. We're going to get into it without any delay. Let's go ahead and start right here. We've got U.S. inflation data easing, and it boosts stocks today. All the indices in the green. S&P up over 1.1%, Dow Jones up 1.6%, NASDAQ over 1%, Russell 2000 1.6%. Folks, this is false hope on these inflation numbers. U.S. inflation data lifts global stock markets, lowers treasury yields. So what this is a phony number that's put out there, and even if it was real, it's not good data. All right, so this data here, let me just give you the read off here. 2.5%. 2.5% from a year ago. All right. Now remember that number, 2.5%. You may think, oh, it's easing. It used to be 3%. At one point, that was 7%. Go back to coming out of the health crisis, it was like 9% year over year. So this is great. Well, is it great if prices are still going up? And get down into the article a little bit here. Personal incomes rose just 0.2%. Right? So how is the inflation data good at 2.5% when incomes are up 0.2%, and that's below the 0.4% estimate? Folks, this whole thing, and I have to remind you often, I have to remind you because this is so important. This whole thing is propped up by people taking on new debt, completely bank driven, completely debt market driven, just like the entire country, the 35 trillion in debt. And by the way, if you look at the derivatives, which are contracts between different banks and different investment houses, you're looking at $600 trillion. I mean, and nobody knows the exact number. That's how insane it is. And it's going up so fast. $600 trillion, folks. Speaking of debt that can never be repaid, folks, this can never be repaid. And we're going to talk about the ability to repay in just a minute. There's some big things. Talk. It's all talk right now, but we're going to show you the likelihood of something like this happening here. Massive debt forgiveness globally, what people are calling a Jubilee, right? So we're going to talk about that here a little bit later in this report. But first, take a look at this. The U.S. consumers are really strong. That's what we're told, right? They're driving the economy with their spending, even though it's borrowed money, even though it's debt, more debt accumulation that's driving the spending. Credit card delinquencies hit 12-year high, right? And this just came out today, actually, the 26th. I'm recording this on the 26th of July. This just came out. So again, we have another case where, what have I been saying? It's going to get worse. It's going to get worse. It's going to get worse. People said I was doom and gloom. They said I was fear mongering. They said I was just trying to get clicks. But this is another sign and proof that things are getting worse. Recent signs, including an uptick in maxed out credit card accounts and rising delinquency rates among cardholders, has indicated a credit card debt crisis could be looming nationwide. According to a report here issued by the Philadelphia Fed, the share of past due credit card balances has hit the largest level since the institution began tracking the metric in 2012. So the only reason they're going back to just 2012 is because they didn't track it like they do now. So it could be even much worse than this. But folks, it continued to get worse. Just as I said here, there's nothing they're doing, nothing the powers that be, the money printers, they're not doing anything to fix this. They're throwing more money at the problem, which is adding fuel to the fire. It's giving more drugs to the dude that's already overdosing, right? They're not doing anything. We need to withdraw from the drugs. It's going to be painful. You're going to get sick. You're going to be laying in bed probably for a few weeks, maybe more, withdrawing from these drugs. But we have to withdraw from the monetary heroin that's being pumped out there to try to fix this. Folks, more money creation is not going to fix this. But yet we see just the opposite. We see more bank lending. We see the banks still at a zero reserve requirement ever since 2020. So think about this. Ever since 2020, basically the powers that be, the regulators, say banks can loan out as much money as they want to. And they don't have to have a certain percent in deposits anymore to be able to loan it out. They can just loan it out. They can have $1 in deposits and loan out trillions of dollars. That's how insane this is. If you don't believe me, just type in zero reserve requirement bank. Sometimes I say stuff and people say, no, that's not true. That's not true. Just type it in, folks. Do you know how to use a search engine? Do you know how to type in a little box on the keyboard? Hit enter. Zeros are, it's true, folks. It's so insane that people just don't believe it sometimes. Um, sometimes truth is stranger than fiction. All right, let's move on here, though. A few other things I wanted to get into here today. Your food is more expensive. Are U.S. corporate profits to blame? We've heard about this, whether they call it greed inflation or greedflation, that, it's not the cost of raw materials that's going up. It's just greed is going up. That's what some people are saying. Well, it's definitely a part of it. I don't think that's all of it. It's definitely not all of it. Company profits, including companies like Chipotle, McDonald's, are seeing profits jump as they continue to raise their menu prices. Right? So they're telling us that when they raise these menu prices, we have to because the cost of wages are higher, and wages are going up some, right? Not as much as inflation, as we just talked about a few minutes ago, but wages are going up some. So they're saying, look, because we have to pay higher wages, you need to pay more for your meal. So of course, most people will do it. Oh yeah, they're paying people. I'm paying this extra money for a good cause because they're paying their people more. I'll have happier people serving me at these restaurants because they're getting paid more. Wrong. They're getting paid a little bit more, but nothing to match the increase in their profits, right? Chipotle's decision to maintain high prices helped boost profits 110%, more than double in recent years, while its executives boasted to investors that they raised prices higher than inflationary costs. They're actually bragging about it. They're not even trying to hide it. Chipotle's sparkling financials are a representation of much of the food industry. According to Guardian analysis, the financial documents and earning call transcripts from 36 top U.S. food companies, folks. Greedflation is real. Sure, there's lots of other things that happen. Cost of energy, that's underlying a lot of this. Cost of transport, everything else. Businesses have to pay for that. But when you see these massive jumps in profits, it's not just about general inflation. This is about greedflation, folks. So remember that next time you go eat out somewhere. I've cut down my dining out probably by, I'd say, 90%. We used to maybe once a week get a little food here and there. Sometimes fast food. Sometimes it would be like Chipotle, places like that. But now it's been months, maybe except for a couple ices. But anyways, I cut down 90%. The family here. Let's talk about what's happening in Vegas. Vegas, big increase in home prices. Home prices are still up 5% year over year, but it's getting to a point where people are starting to notice the uptick in foreclosures in Las Vegas. I'm just going to play you a clip here on one person's story out of Las Vegas. Folks, take a listen to this.
Cost of living is so high that I live from paycheck to paycheck and I can barely make it.
Yolanda Perkins' story is becoming all too common across Southern Nevada.
Are you having to readjust your budgeting just to afford the roof over your head?
Yes, and I work 2 jobs. I make over $5,000 per month.
$5,000 per month. She's working 2 jobs and she's living paycheck to paycheck. She's having trouble paying her mortgage. In just a bit here, they're going to tell you how much the mortgage delinquencies has risen in Las Vegas.
And I cannot make it.
This Las Vegas resident I met in a North Las Vegas parking lot is struggling to pay her mortgage, and she's not alone.
Largest growth we've seen in default activity has been in 89031.
A recent Lead Center report from UNLV shows notices of default have jumped over 41% since June.
Up 41%.
Of 2022.
Right now, consumers are feeling the pinch of living in a high-cost environment.
Sean McCoy, executive director of the Lead Center and co-author of the report, says several areas across our valley have been hit hard, but North Las Vegas, where Yolanda lives, leads the way. So why is this happening? Analysts blame inflation.
Consumers have gone through much of their savings, and it's becoming increasingly more difficult.
Oh, what have we been telling you here for 2 years? When we started seeing savings drop, over 2 years ago, we said this is going in a bad direction and it's not going to get worse, or it's not going to get better. It's likely just going to continue to get worse. And it's just going to continue to get worse. So anyone thinks that the default rate in Las Vegas is just going to stop getting worse? No, it's going to get worse, folks. So we're headed into a crisis. It's kind of a slow motion entry because of all the just massive lending that banks are still doing, right? It would be a massive drop, a collapse, a cliff if banks were to pull back on the lending today like they did in 2008. But they're being very careful not to do that at the direction of, I think, some pretty high level people. Let's continue to play this.
Difficult to weather those small bumps in the road with other types of income sources they might have to help mitigate the chances of missing a mortgage payment.
Has there ever been a moment where you thought to yourself, I can't pay my home payment?
Yes, I mean, I'm coming close to that, I question myself how it will be.
Could there be another real estate crisis like what we saw in 2008?
The core difference between today.
I mean, she's not a young person. She's not old either, but someone, her age should not be struggling financially. I mean, your 50s, 60s, whatever she is, you want to be sort of financially set. You don't want to be living paycheck to paycheck, stressed out, worried about paying your mortgage. I mean, being homeless is awful at any age. Imagine being homeless in your 50s, 60s, 70s, and beyond. I mean, that's a death note right there, folks. It's just that's reality, though. That's what's happening, folks. So on to some other sunny and bright and happy news. Here, let's talk about this here. African faith leaders join pleas for Jubilee debt forgiveness. So apparently there's something is it in the Bible? Right? I'm not read up on the Bible like I should be, I guess. A debt jubilee is what they're calling for across. This was a statement to the G20 and G7 nations. IMF and World Bank calling for debt relief for certain countries here. So apparently there's some religious backing of this debt jubilee. And let me see if I can find out what it says here. The religious leaders recalled the successful campaign of faith communities and activists in the lead up to the great 2000 Jubilee year, which led to the largest ever collective debt relief initiative. The idea was inspired by a biblical 50-year debt jubilee of ancient Israel, which the Catholic Church celebrates every 25 years. So, I mean, they're going to have to do massive debt forgiveness. Basically, what they're talking about here is unpayable debt. And we know that the debt, it's all unpayable because every time they issue a new dollar for someone's income or for a loan, it's a new dollar of debt. It's all borrowed money. It's all borrowed money. That's why we have some countries talking about going back to an asset-backed currency. It's not just borrowed money. It would actually be a note of wealth. If you had a dollar that wasn't a debt note, you would have something that was backed by, let's say, precious metals, gold, silver, and others. And it would be, instead of a debt note, it would be basically a wealth note, right? So imagine having a currency, a dollar, whatever your currency is. Imagine having something that instead of depreciates, it appreciates. It gets more valuable. Imagine something like even a Bitcoin or something that just gets more valuable. One, people wouldn't be in such a hurry to spend it because when a currency is devaluing, when it buys less and less because the cost of living keeps going up, people are they're in a bigger hurry to spend it. They're like, why not spend it now? Because if I don't, what I was going to buy now, it's going to cost even more in a few months. So I might as well spend it. And then that creates more inflation because of all these dollars out there being spent by people just desperate to spend the money before it devalues, before costs go up even more. Then that makes inflation even worse. It snowballs. Then it makes inflation go up even more because you have all these people bidding up the cost of everything: food, travel, you name it, hotels, housing, of course. So this is what they're talking about, folks. Unpayable debt. Will they just forgive it? And will it be just like student loan debt, where some people get the debt forgiven? In this case, students are looking to get their debt forgiven, but other people don't get the debt forgiveness. In this case, they're talking about certain countries are going to get it forgiven. Other countries probably not so much. But if it's unpayable debt, that means the U.S. should also get the Jubilee, get the debt erased. But they're still trying to pretend, and they're still trying to get you to believe that this debt is somehow payable. Folks, it's not payable. It can never be paid off. All right. What do you guys think about that? Please let me know down in the comments. Oh, wow. Another article here, another update here. We talked about this here. 1 in 5 credit cards are maxed out. Another article talking about that here. Persistent but cooling inflation. There we go again, cooling inflation. Elevated interest rates continue to increase borrowing costs. 1 in 5 card users are maxed out. So we're at a time now where it's going to be make it or break at the banks. They can start tightening now, which is really going to mess up the economy. Because when banks are tightening, I'm not talking about the central bank, I'm talking about banks that actually issue the credit cards. That's when the economy really starts to crumble. All right, so we'll have to see how it goes. Something else here, consumer sentiment dips as inflation expectations remain flat. So consumers are still feeling the pinch. Why aren't consumers' expectations improving? Right? If what we're told is true, inflation is easing, things are getting easier, right? Consumer sentiment wouldn't be dipping if that was true. Am I correct? Please let me know what you think about this down in the comments. The big inflation deception, folks. What else did we talk about today? We talked about the credit card delinquencies, 12-year high. We told you it was going to get worse. The debt jubilee, the inflation data. They're still talking about rate cuts, food inflation, and greedflation with these prices going up. It's a joke, folks. It's all a sick joke of some sort. Yeah. Hope you guys are doing well. We'll probably see you on the weekend. I'll be here, I think maybe either Saturday or Sunday, maybe both, but I doubt it. There may not be that much to report on, but we'll see how it goes, everybody. As always, keep stacking. Hope you're well. We'll see you very soon. Please make sure you are subscribed. Keep this channel alive. Thank you so much, everybody. Bye for now. Peace.